Hello, 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 everyone. Happy Wednesday. Been snowing here. Snowy Wednesday. I have to go clear the driveway after the live stream and after the open. So, how is everyone doing? Good morning, Rams of Paul. Good morning, Patrick. Good morning, CD. Good afternoon, Charles. Good morning, George. Let's see. Well, I hope everything gets back to you, there, Charles. You get your data feedback. Grand Rising, Christoph. Where else are we? Hello, Sterling. Already putting in uh, I saw that earlier this morning. I was talking to broker. Yep. And now it's figuring out what's going to be done. We have double tops triggering. Bear's going to eat. We'll see if it continues beyond the double top targets much. Good morning, Jacob. Hey, you give me my pullback. Don't know what that means exactly, but it's probably my not interpreting things correctly. Good morning, Ted. Good morning, Anissa. Good morning, Goptions22. All right. So after Microsoft's conference call, things sure reversed. Things sure reversed. You know, everybody got things priced in perfection, bidding up Microsoft. We talked about that a little, and then the conference call sort of put a kibosh on that. Today there is nothing besides crude stuff, EIA stuff. So if you're trading like oil, gas, stuff like that, fine. You're paying attention to that at 9:30. Mortgage stuff came out at 6 a.m. Other than that, very quiet day. Stock market pretty red today. We had AT&T earnings, Boeing earnings, Abbott Labs. Boeing was down. AT&T was up a little, and Abbott was down, and as Boeing was down. So you see AT&T up here. That's one I've been keeping a very close eye on. Again, I put out that video a couple weeks ago on it. What else do we have? Not much to talk about there besides a big reversal. This is why I don't use after hours and pre-market hours to do patterns, because it just completely messes it up due to thin markets. Now, if stocks were, traded more like futures, it would be a different story. Technology taking it in the shorts this morning. Consumer cyclical and communication services leading it down. So still, we're still up big in communication services for the last week, but getting a little toppy here and some more profit taking off of this rally. 97% for the 25 basis points. Still in greed mode. Going to have to see how much that shifts down today. We are back in negative gamma. Remember, the gamma flip is about 40, 60, 40, 50 area. So if we do get some acceleration to the downside, dealers can be hedging into it and going with the sell-off instead of against it. Keep that in mind. And it really starts to bottom out, starting to get to that trough below 3,900 if you get the bigger sell-off. As I talked about, we have Boeing, AT&T, Abbott were the ones I was watching this morning. We had Tesla after the close. It's going to take a lot for Tesla to really miss, because the earnings guidance has been pummeled. It's dropped substantially, so I would not be surprised to see them beat with the completely downward revised earnings. Now, what that does to the stock, I think it's a gift if the stock pops up, because it could be setting up for another substantial short play. Other than that, you got IBM and nothing really important. CSX, Seagate minor, but CSX will be interesting from rail traffic information. So that's where we sit there. Again, little doubles trigger, not big patterns, but also going into these clear paths and pausing right now. Interesting enough, at the pausing hour on that 4-hour clear path. The targets on the S&P you see triggered here on the 4-hour time frame little mini pullback. 39.79.50, 39.66.75, 39.53.75 are to the downside. Remember, you are into this little daily clear path, and we're sitting at the pausing area at the 4-hour. So we got a little bounce there. So that's what I'm watching for. Continued downside right now in order to invalidate the pattern. Oops. Right now, in order to invalidate it, 403.750, a close above there, or a trade through 40.44. So it's going to take a lot, even if it bounces in the open, for anything else. Now, I will be paying attention if it can get above about 4,015 going into the open. That will, that would be the dip buyers have come in pretty strong again. So that is the key level I'll be watching to sort of change the sentiment into the open. Everything below that could just be a bounce and a roll over. The NASDAQ, again, triggered the double. Come on, chart. Triggered the double. Gave a nice little pausing bar. And first and second targets hit. So stop reduction. And everything else. The key level is 11,894 to invalidate the pattern, but I'm really focused on 11,817. Okay, 11,817 is a key level, because if we start getting above there, we could see again the dip buyers trying to rush in ahead of more earnings, thinking they're getting a bargain in the markets. If we go below here, remember, we do have a daily clear path. Your pausing areas, which this could be rolled down. This is one instance where it could be rolled down if we get a lot of weakness into the open. The key pausing areas about this 11,680 to 11,665. Below 11,665, you're into another clear path move. So I would be watching 11,534 and 11,453 are the key levels. The downside already went over the upside. The Dow, which has not triggered the potential double top yet, needs a 4-hour close below 33,474. 33,269, 33,166 are the key targets for that. That has not triggered yet. All right, so keep that in mind. The Dow holding up the best. Now, my level to watch for over the open is about 33,650 and then 33,728 on any rallies. You already have the downside targets. The Russell, which it was pretty sloppy. We had a potential little minor double bottom. It never triggered, but the Russell is on the 1 hour. On the 1 hour has triggered, not the 4 hour yet. So I'm just using these intraday targets. 1873, right around 1868, then 1863. Remember, your clear path moves pauses right at that area, the first target, 1873. Then you enter another clear path move lower. So that's what I'm watching for there. The spiders, the spideys. What do we sit at? So we have the gap down, 396.10. Areas I'm keeping an eye on. This key open from Monday to the upside. These are my upside targets, 396.72. Then yesterday's low. We have fair amount of overhead resistance, 397.64, and then yesterday's open, 398.88. Those are my upside targets should we try to put in a base and rally a bit. This is not something that I'm just going to be, hey, rushing out. Let's just go for the gap down full close. Now, the gap down full close target, and that's just not for today, but if it snaps back and we still get The dip buyers who aren't done yet, $400.20. Key to the downside. We have roughly about 395.90. We start breaking below 395.90 though. There is not a ton of support. See here, there's that 395.90 area. Below that, you sort of have to use your retracement harmonics. So my major level below that is about 394.90 to 395. The key line in the sand is 393. The Qs, that's just, it's a really flat one. I'll put up the targets just for this. They're a little less reliable with the, as we see, 289.34. See, that's just yucky. I'm just going to put up the targets because they're going into these clear path moves. You know, you can use these downward target. I mean, we're down below all those. So you can also use these for bouncing. So 283.36, I'd just keep that one in mind. Then I'd use the retracements. 282.07 is the next key level. And here's where I'd like to use the retracement levels going back up. So 284.10 because we got clear path, and then 286.14. The key line in the sand is 280.04. The DAX still no double top on that. If we do break down below the lows from the 19th, I'm really just targeting about 14,900. It gets starting to get interesting below 14,900. Until then, not much going on. There's just, you know, it would need to really get started about 15,218 before looking for any bounce pattern. The notes, nothing yet. I am watching for, if we do sell off, I'm watching for a continued little bounce rally. Okay, key levels are 115.18 and a half and 115.25 and a half. Those are what I'm watching for to the upside. Dollar index is still just chugging along sideways until, looks like we're getting, until the rate hike next Wednesday will probably trigger the next significant move in it. However, above 102 gets interesting. That's been the rejection point for the last couple of days. So that's the point I have alarmed, or a bookmarked alarmed, you know, set up to get alerted. VIX, little bounce here. We'll pay a little more attention to it if we can get above 2060. Other than that, Crude, pausing after the drop yesterday, getting out with cycles getting closer to the bottom, but not yet there. So this is where, you know what, watching for, if from a perspective, again, can't tell people what to do, but this is the kind of thing, watching for that pullback. So this could be a shot with a tighter stop, because you have a stop just below this level for, hey, trigger double bottom. Something holds in here, very tight stop, fantastic reward to risk. Breaks below here, closes below this 78.45, wait for the bigger pullback. Really, gold is still in just trailing mode. Not yet. A lot watching for some key pressure coming in your 10-year Japanese bonds, but not yet to a critical area. So I am starting to keep a closer eye on that. But if we start breaking below 129.50, we could be in for a retest of the most recent lows. Euro, still nothing great, no great setups in there. I'm keeping an eye still on this level, this 108.50. If we start breaking below that, going to watch for a pullback, but there's no great pattern in it. Pound, Again, the big pattern, there's no small trading pattern just yet, so nothing I'm looking at. The bigger pattern is back below 118.41. Bitcoin still just moving sideways again. Tesla earnings after the close. So sitting in a key level, little gap down area. But probably going to be a little quieter trading. If it does get through today's high, if the market snaps back and Tesla can get through today's high, key target is the 153 area. If it breaks down below yesterday's, what's yesterday's low? The 141.10, we're sitting in front of it right now. If we break below yesterday's low, it's just in this clear path move, but my target would be 136.68. Let's see, again, Microsoft, which, I mean, remember where it was trading last night? Now back going to gap down pre-market. Key area I'm watching now is still this low, 230.68. Into that, we have gaps left behind in clear paths, so those are the targets I'd be utilizing. Gap fills to 228.85, to 227.12, and then to 224.93 are my key targets to the downside. What did I miss? Let's see. Surprised the NYSE isn't blaming another guidance. Yep. Okay. ECB's 50 basis point hikes the next two meetings appropriate. Let's see if they can actually have the fortitude to do that. So AT&T cutting costs. Did not see that headline this morning. Let's see what else we have. Sterling putting in all the headlines. Good morning, Donald. You always say buy the dip, Coco. Question, even though we count mini futures, we don't count the aftermarket movement of stocks for double top patterns. Is double top still valid? No, I would just don't use, it's not valid for another reason, but it's not because of the aftermarket value. If it was still, even with that aftermarket run up, use the levels I set out. Why you use the futures is the futures volume trades very consistently. The stock volume is really volatile after and pre-market, especially after market, and you can get these insane moves. It completely destroys the reliability of patterns. Completely. That's why you don't use it. But that double's not valid for other reasons. You also have a 1 hour potential double bottom on crude for anyone looking to enter. Yeah, I don't normally go to time frames. We'll take a look at it. Again, if you trade the super short time frame, you have the little potential double. Is it confirmed? Nope. So that is a valid pattern. So could that take it back to 81.66? Yep. So there you go. First key area is 81.17. So there's your little mini potential trade pattern going into the EIA numbers. You want natty gas? Natty gas, there is a new higher time frame potential double now after stalling out at the second target on the daily. That's the only thing bullish right now. Again, your next major key support, your minor key support is see, it's not even great positive. I mean, you can use your reverse harmonics right here. Did I get the wrong peak at that? 356.4, 359. No, I did get the right peak. Your next key levels, though, if you're looking for tighter levels, you don't have much down here until the 253 to 259 unless you use the real little micro reverse harmonics. So there's not a lot. The only thing from a trailing perspective is if this new double triggers because it's a higher time frame double, that could be at least a short-term bottom. No idea. Remember, the size of the inversion, there's been no, I have not found any study that shows the size of the inversion determines the magnitude. Now, as we've talked about, there's many things pointing to a recession, but just because this is back to those 81 levels does not mean the recession is going to be as bad or less than or anything else. So, you notice on XOM SBR and generally all oil companies seems to be rolling over. In the short term, there's a little pullback. Do we have any major topping patterns? And ignore this bar from yesterday with Exxon. What's the key pattern now? Again, ignore the bar yesterday. The only thing that makes me sit up and take notice with things rolling over more so like Exxon is if we get a close back below 102 area. That's the only thing. This is not really rolling over just yet. Yeah, you can get a little short term. This is where we got this friggin' data. Yeah, is this a little mini double top that could get a pullback? Yeah. Is that a huge rollover move? That's why I'm a stickler for time frames. Look, is this a pullback? But is this a major rollover? No. This is a pullback. Your major rollover could be if you get that weekly close below 102. Until that, it's just holding up at high value. Look, put it in bigger perspective. This is where people get too caught up. You see, here was the major high breakout areas. Let me pull off a couple lines. Here was your major breakout areas. You see here, it's still trading well above it. Because that's a roughly 101, 102 area. So that's the area that I start watching for a more pronounced rollover. Until then, still holding around key high areas. Because you can see that double on the weekly right here. So then that would be a larger rollover. So far, not a major rollover though. Hello, William. So that's where we sit right now. Let's just peek back into right before the opening, especially at the NASDAQ. The NASDAQ, come on, Nazi. All right, don't have much more to complete that little final pattern. It's pretty much nearly done going in the open, so we'll have to see if this support base holds or if it cracks right at the 50% harmonic level. Also, 11,660 area on a push down will be interesting. S&P 39.7950, watching for the open on any bounce. If you want a little tighter level, it would be about 39.9950, so 4,000 on any bounces. The first key level I will be utilizing. All right. With that, I shall wrap it up. Everyone have a fantastic day. And we will be back after the close with Tesla earnings. See everyone then. Bye for now.